Welcome everybody to our inaugural webinar, Survival and Stimulus tonight, our business guide to COVID-19. For those that don't know me, my name's David Evers. I'm the Managing Director here at AdviceCo, and I'll be one of your presenters tonight. I'd also like to take this opportunity to introduce Steve Walker, my fellow principal here, one of my fellow principals at AdviceCo, and he's our stimulus expert. So we've really appreciated Steve's support and expertise in what is a rapidly changing environment at present, and he's been invaluable for our team and our clients in this new world. I'd just like to say at the outset, thank you for attending tonight, and congratulations. You've actually taken the first step to improve your financial position in these extraordinary circumstances. Following tonight, for those that aren't already working closely with us, you'll have the opportunity to discuss your own personal situation and explore strategy options with one of our team so you can truly become better off. We are really living in extraordinary times. We've seen a significant number of businesses being forced to close their doors. We've seen many who are able to, or still able to continue to trade, but they're facing significant challenges, be it a reduction in the number of customers, supply chain interruptions, and even for those people who are still being able to operate, there's still a significant health threat that's worrying to owners, their teams and their families. So I say again that these are truly extraordinary times, and that's the fundamental reason for these stimulus measures that the government's putting out and what we're focusing on and discussing tonight. Pretty much every business and their teams will be significantly impacted by what we're facing, and so there's a real need for our clients and for businesses more generally to properly appreciate this new environment, determine strategies and adapt their strategies so they can act decisively in this climate and basically change their business operations at this time of crisis. It's appropriate to give you a little bit more information about us and our presenters tonight. So, as I've already briefly outlined, I'm David Evers. So I'm a chartered accountant and financial planning specialist. I've been working closely with small and medium businesses since basically 1986. Steve, my accounting colleague, he's a little bit more experienced. He started in 1985. Steve's a chartered accountant and also an auditor, registered company auditor, and so absolutely has skills in understanding legislation and how that best applies to client circumstances. So he's been looking at all options available to all of our clients. That's a photo of Steve there. So tonight's not about us. It's about focusing on your particular business. But at AdviceCo, it's simple to say that we do provide a complete advice solution to all of our clients. We've been running client presentations for well over a decade, focusing on business improvement, financial strategies and opportunities within legislative environments. And we've been doing that successfully for a very long time. But I would have to say that this is our first webinar. So just like our clients are being forced to adapt in this environment, we too are being forced to adapt, change and improve our own businesses. I've just been flagged that from Alison that we're getting some double echoing going on with the speaker at her end. So we might just have a look at that, Sarah, if we can. Excuse me for a moment. As I said, we're being forced to adapt and improve our own businesses at the same time. Now, we have more than 120 attendees actually sitting online tonight. So if we do experience some technical difficulties, and Alison's just flagged one perhaps, I do hope that you are generous and work with us a little bit. We do love presentations and we welcome your questions at any particular time. The more questions, the more interactive, the better. With the number of people we do have on this webinar, if I don't get to be able to deal with your question live, we are capturing those questions later, and basically we will have the opportunity to come back to you if we don't, if we run out of time and just I can't handle every question from 120 people, so we'll do our level best. Just remember, you will have the opportunity, as I said, to virtually meet one-on-one with one of our team to explore how these strategies could be potentially personalised for your own circumstance. I implore you at present to basically record or make notes as you're going through. As you're considering these various stimulus measures, jot down your questions so we can refer and come back to those later. That's the way that I think you'll get the most value out of what we're actually bringing to the table today. So what are we going to cover off? Each one of these stimulus items in particular, we're going to focus on 10 particular areas. It's important to note that the stimulus options themselves aren't mutually exclusive. So you can have more than one stimulus option. So you can basically apply or use, in some cases, multiple strategies. So the 10 options or the 10 strategy key areas that we're focusing on are firstly the Jobkeeper Payments, secondly, Tenancy Legislation, thirdly, wage subsidies, followed by Payroll Tax, BAS discounts, instant asset write-offs, depreciation increases, fee waivers, loan support and interest rate relief, and the small business grants. So again, I encourage you to take notes as we go through these and perhaps consider what strategy you could be looking to employ in your business for each one of these particular areas as it becomes relevant. Now, again, if you're on your Zoom presentation, there's an opportunity in the questions and answer button. If you want to raise a question, please feel free to do so, and we'll do our level best to facilitate an answer for that. So if we jump in, the first topic that we are looking to cover off on tonight is the Jobkeeper stimulus payments. And Steve, as I mentioned, is our expert, and I'd like to introduce him and ask him to explain to the group just how they're going to apply, Steve.
Okay, thanks, David. Just for clarification, right at the moment, this legislation has gone through the House of Representatives and should go through the Senate tonight. Both the government and opposition are in support of it, so I can't see that there will be any hindrances to it actually getting through. Jobkeeper itself, and I'll say up front that occasionally I slip and say job seeker because there's two very similar names. If I say job seeker, please indulge me and insert the word Jobkeeper there. Jobkeeper is available to any business which stays active and experiences a downturn of more than 30%, or in the case of charities registered with the ANC, of a downturn of 15% in 1 month compared to last year, and is entitled to a flat $1,500 per fortnight payment for any employee listed on their books as at 1st of March. Strange one about this is though the commentary says an active business actually includes those businesses which, by the rules that have been implemented for things such as cafes, gyms, pubs, clubs, galleries, who can't trade but keep their staff on, are considered to be active. The job seeker payment itself includes sole traders, partnerships, and trusts. To be eligible, an employer has to elect to become a Jobkeeper payer and register with the ATO of their intention to apply. It has to provide the ATO with details of eligible employees. The employers that are currently using single touch payroll will be able to primarily get that list pre-filled by the ATO from the single touch payroll data. What is an eligible employee? An eligible employee is somebody who was employed as at the 1st of March, and those employees who were stood down after the 1st of March but are currently reinstated still stand as an eligible employee. Full-time, part-time, and casual employees who have had regular shifts for a 12-month period or more and are not receiving Jobkeeper from any other employer. Jobkeeper is only payable one time for each person that's an employee. The payment that an employer will receive is a $1,500 per fortnight amount, and that has to be passed on to the employee. So an employee who currently earns $750 per fortnight, their pay has to be doubled. It's an interesting scenario where some people will actually get a pay rise and be subsidised by the government for it. The one thing here is that the employer needs to initially fund it. It's paid, has to be paid to be claimed by the government. The government will be paying that 1 month in arrears.
Excellent, thanks, Steve. So basically, the employer will have to pay the payment first, and if they've got cash flow difficulties, perhaps can talk to their bank, whether I believe it's bank financing can help in that space, to enable them to then perhaps claim this back from the tax office when it arrives.
That's correct.
Okay, now I've got a question from Renee, who's mentioned, what if I purchased an ongoing business concern in January 2020 and that business was running several years beforehand? So effectively they weren't operating at that time.
Okay, there was a Treasury press release that was issued last Sunday, the 5th, which said that under special circumstances and newly established businesses, there is a discretion for the ATO to apply the Jobkeeper payment.
Yeah, so we haven't seen the nuts and bolts of that yet, but they have expressed their willingness to be looking to find ways to people to actually benefit from these as opposed to disqualifying people. So they're taking a positive attitude toward that. I've got another question from Michael who's suggested, what is the 30% downturn compared against? Is it a month-to-month review for eligibility? It's
comparable to a comparable period in the previous financial year for a month. So if it was March 2020 you were talking about, the comparison would be March 2019. Again, the press release that came out from Treasury on Sunday suggests that the first port of call that they will be looking at is the BASs that have been lodged by the entity. Yeah, so the devil will be in the detail when we see the relevant regs, but they're focusing on BAS answers. And another question from Eamon here, how long, for as long as the period of COVID, how long are the payments going for? And I believe they're 6 months. It's everything in terms of this legislation is for a period of up to 6 months. Yeah, so excellent. So thanks, Steve. So we have been proactively working with our clients and we've developed some real life examples where we'll start to cover off on some of these things. And Steve had a live client example, which is what we have in front of us there at the moment. Mr. and Mrs. Jones, names have been changed to protect the innocent. But effectively, Steve, what can you tell us about this example? This is one of the examples I was talking about where it's almost counterintuitive. By increasing a salary, they actually get a better result than if they were to continue to pay themselves. Mr. and Mrs. Jones are employed by their family company on a part-time basis. They each draw $1,500 per month. Now this has been going for several years, and in this scenario, they are anticipating a drop of 30% or more in their income. So their strategy was to seek professional advice. That meant getting on the phone to me and registering for the Jobkeeper stimulus with the ATO. We looked at their results, and the advice that I ended up giving them was that they would be better off increasing their salary to $1,500 per fortnight. Previously, they were getting $1,500 per month. The company is then eligible to claim Jobkeeper. Jobkeeper is a flat amount which needs to be paid out to the employees, and it's $1,500 per fortnight. So if they'd kept their salary at $1,500 per month, they would not be entitled to any support under the Jobkeeper program. The cash flow provided by Jobkeeper actually gives Mr. and Mrs. Jones $300 per fortnight for a period of up to 6 months. So it's approximately $36,000, give or take, depending on when the fortnights fall. Excellent.
Right, before we jump into talking about tenancy, there's another couple of questions there, Steve, that have come in from Andrew. If we're paying higher wage, does that have to remain in place after the grant's removed? I don't believe that's the case.
No, not at all.
So the short answer is that won't have to, Andrew. So we've answered that question. And another question from Michael. We've doubled turnover since last year. How do we substantiate that we've had a 50% drop from last month? Then I believe there's a discretion available to the ATO. There won't be.
Yes, the discretion covers things such as a newly established business, a ramp up in operations which has suddenly been hammered, a variety of circumstances. As David says, the devil's in the detail. We haven't seen how that's going to apply. At this stage, Jobkeeper essentially consists of logging into the ATO, registering your interest that you will be applying, and having received an email from the ATO saying, thank you for registering.
Yeah, again, they're encouraging, they're being very positive in terms of all the language to saying they are looking to find ways for people to actually meet these criteria. So we shall see. Tenancy now, this has been a highly contentious area, and we've been basically sweating on the government to release this advice for at least the last 2 weeks. There's been some announcements that have been released today, earlier today, from, or at least announcements from the Prime Minister earlier today. But we are really in a state of flux. So there's a lot of basically people whose leases have been frustrated by these various measures. We've had tenants who've been unable to trade because basically their business has been closed down to do with the health crisis. We've had landlord clients, small business families who rely upon rental incomes to live, who basically have had their tenant closed down on them. We also have investors who have purchased residential properties, who are renting the properties to tenants who have lost their jobs and are now facing the inability to effectively pay their rent. So it is clearly a vexed issue. And we've had some proposed code of conduct advice this morning which deals with commercial leases. Nothing's available as yet that I'm aware of. You haven't seen anything today in respect of residential leases.
The only thing that's come out really in residential leases is there's a prohibition from eviction for a 6-month period at the moment.
Yeah, which is again by announcement. We haven't seen any legislation on that yet. But Steve, why don't you talk us through some of the announcements in the code of conduct as to what's happened today?
Okay, the code of conduct has been a problem getting through the National Cabinet, which consists of both the federal and state governments. The reason for that is essentially tenancy law is state legislation and they're trying to get a national code going. What the code that has been approved came out in the National Cabinet yesterday is essentially saying is that a tenant who qualifies for Jobkeeper, this is the first criterion. You have to qualify for Jobkeeper under the details that we just went through. So a 30% plus reduction in turnover is then in a position that they are governed by this national code. What the code permits is up to 50% in rental waiver and 50% in rental deferral, which has to be negotiated with the landlord and the tenant. When I say permits, some of it is actually compulsory. It's driven by a drop in turnover. Now, I've already really addressed that in the fact that to get JobKeeper, you have to have a drop in turnover. A minimum of the percentage of turnover that you drop is also the percentage of turnover that you can claim as a rental decrease. How this is going to work in a scenario where turnover continues to drop, we haven't got detail. But let's move on to the example on the next page, and with this, there we go.
Here we go.
May give you a little bit of clarification. So retail shop operates in a large shopping centre paying $10,000 a month. This lease is not a turnover-based lease. Some leases are, and that's a different thing which I don't propose to address tonight. retail shops' revenue decreased by 50%. Because that 50% is above the 30% for Jobkeeper purposes, they qualify. The strategy that retail shop has to do at this point in time is ensure their financial records remain up to date, and they have to negotiate with the landlord based on the turnover fall. The result, based on the code of conduct that came out, is that a 50% turnover fall will result in a 50% reduction in rent, half of which is a rental waiver and half of which has to be deferred by the landlord. Given a 50% turnover reduction on $10,000 worth of rent, the impact for retail shop is a total impact of $5,000, which comprises of $2,500, which has to be waived by the landlord, and a further $2,500, which has to be deferred over a period of at least 24 months after the end of the pandemic period. So that means that initially, on the turnover scenario we just talked about, retail shop has to pay $5,000 of the $10,000 rent now. $2,500 will be waived entirely, and a further $2,500 will be deferred until the end of the pandemic period. In addition to that, landlords are prohibited from implementing any rental increases during the pandemic period.
Excellent. Thanks, Steve. So it's an area that we've been helping our clients with fairly extensively at present, is basically being involved in negotiations both from the landlord and the tenant side. So effectively, our recommendation or our suggestion at this point, if you haven't already done so, it's a great opportunity to pull out the lease that you're currently under or that you're currently receiving rent on, dust off the dust, and revisit your obligations under that particular lease and start constructive dialogue with your either the other lease party. So there is in the code, which Steve may have mentioned there a moment ago, there's the obligation for both the tenant and the landlord to provide financial information to each other in the negotiations in good faith. So you don't have to take the word for the other party. You can review their books and be constructive with your negotiations. So sooner you start those negotiations, the better outcome you're going to have. So that is one of those positive steps that you can take action on right now. So I do want to just revisit there again the Jobkeeper payments. We did have some further questions that came through late on the screen, which we haven't had the opportunity to. Just remember, team, if there's any questions that we don't get to, you will have the opportunity to take those up independently following tonight's presentation. So, Steve, the next issue that we
just before we go on to the next issue, I should make a point. The Code of Conduct actually has 14 separate guidelines in it. The stuff that's on the screen there is just a very brief overview.
Yeah, there's a lot to cover, and I suspect there'll be a lot more press about this in the next week or so, we'll, I suppose, watch this space. So we'll be making sure that we're keeping our clients and the broader business community up to date with basically updates as they occur when they deal with very significant matters such as this. So next item we had that we're covering off on in terms of stimulus is wage subsidies for apprentices and trainees. These announcements came out, which seems like a very long time ago now, Steve, but that was approximately about 3 weeks ago, lifetime in this current environment. So basically, it's one of the more straightforward areas about where some of the stimulus measures, where they can be activated and what you need to do. Steve, why don't you give us the heads up?
Okay, well, pretty much the points that are on your screen right now are the summary of it. An employer who has less than 20 staff, including trainees and apprentices, is entitled to get a 50% wage subsidy for their apprentices and trainees up to a maximum of $7,000 per quarter. That's actually per employee, per Now this really, for those who are accessing it, you should probably by now have actually been contacted by your network provider in relation to that. If you haven't, I'd be getting onto them straight away. The period that this runs from is from 1st of January to 30th of September. So it's the 3 quarters ending 30th of September.
Excellent, Steve. Just a couple of things just on the Jobkeeper payments, just to take a step back for a moment. Do the employers have to pay other on-costs such as superannuation and other components on those Jobkeeper payments?
Superannuation, if there's an increase in an employee's salary as a result of getting Jobkeeper, such as Mr. and Mrs. Jones in the example I gave you, the superannuation is only on their base salary. If, however, Jobkeeper is just basically replacing an existing wage, then superannuation remains payable.
Excellent. So, payroll tax. Tax, my favourite tax. And I'm being terribly sarcastic in that because this is a very unfortunate tax in the environment that we currently find ourselves in, where employers are actually being penalised for doing what we really want them to do. So it may be a bad tax, it will remain with us, but Steve, there is some good news in this space. Can you tell us a bit about the reductions that are coming?
Okay, this again, payroll tax is a state tax, and I'm only really addressing the New South Wales component here. Other states have their own plans, so be aware of that if you have interstate employees. Okay. This applies to businesses with payrolls between 900,000 and 10 million across Australia. What the state government has announced is basically a 25% annual discount that will be calculated on your annual reconciliation of your payroll tax. But in the short term, you have no need to pay your March, April, or May monthly payments. In fact, you don't even have to do your reconciliations on those 3 months unless you want to do it for the purpose of assisting with your annual reconciliation. Once you've lodged your annual reconciliation, the Office of State Revenue actually is now Revenue New South Wales, I think. Service New South Wales. You know, you keep people employed by changing their names all the time. Service New South Wales will calculate the 25% discount. If the payments that you've made to date are more than the annual discounted amount, you'll get a refund. If they're less, then there will still be a bill. The Service New South Wales is taking a fairly lenient approach in terms of when that amount will be payable. They're saying that they'll accept a deferral of payments up to 6 months, and at this stage their webpage is saying don't bother contacting us about it, it's just automatic. In those circumstances where an employer does have Australian wages in excess of 10 million, they don't get any of this discount, but they can defer their payments again up to 6 months.
Excellent. Thank you, Steve. Now, BAS discounts. Now, basically, these measures are something the government has announced, and they will permanently assist business owners. So these aren't measures that will are a time indifference or delaying a payment. These are, if you like, a windfall gain for certain eligible businesses. So some of those businesses will actually benefit up to $100,000 in certain circumstances. Now, there's some strings that are attaching to it, and it's exceedingly complex as to how it's administered. I'm very glad that Steve's the one that's going to explain this, as opposed to myself. But Steve, if we talk through what's available to our audience and touch base on just some of the key areas.
Absolutely. As David said, this is one of the most confusing aspects of all the packages that came out, and it was originally issued in Stimulus Mark 1 at much lower levels than it was upgraded in Stimulus Mark 2 about a week and a half later. What is available here is for active employers. Now, active employers basically means somebody that had people on the payroll as at 12th of March. That's the date that the first announcement came out. are entitled to an automatic credit of PAYG withheld on their activity statements or business activity statements or instalment activity statements for the period from now until the lodgement of the 30th of September activity statement. There is a minimum payment to employers of $20,000. Sorry, I'm going to clarify. I said payment, and that's what the press says. It's actually a credit on your BAS. You may end up with a payment and a refund. You may just find that it offsets things such as GST.
Yeah, so Steve, so if a business already had a liability to pay, say for example, a BAS that had not been paid, had a liability for GST, they may not get that cash straight up. Is that correct?
They might not get the cash, but they will get the liability that is owing to the ATO will be credited.
Yeah, so they'll owe less to the ATO,
yes,
but effectively they may not get cash in that circumstance.
Yeah, that's correct. Okay, the minimum credit that an employer will get is $20,000 over the 6-month period, and that can extend as high as $100,000. Now, this is implemented in 2 stages, so bear with me. Stage 1 is a credit to your integrated client account of up to $50,000 based on the amounts of PAYG withheld as disclosed on your activity statements in the period between March and June 2020. For monthly payers, the initial credit you will receive will be 3 times the March BAS activity statement figure. So if you've got a figure of 10,000 showing on your March activity statement as PAYG withheld, you will get a credit of $30,000. However, if you had 50,000, you would also get that. The maximum credit you can get is 50,000, and if you haven't got to that 50,000 figure in your March activity statement, then you will get continuing credits in April, May, and June, up to that cap of 50. If you don't get to 50, you get what you get. For those who are on, who have lower payrolls, the minimum credit you will get is 20,000. We have a situation where there will be people who have no PAYG withheld on their BAS, and they will still get a credit of 20,000. Now that, again, in stage 1, half of that, up to $10,000 on their March to June figures, and that is stage 1. Stage 2 is calculated purely by the ATO duplicating the amount that was calculated in stage 1, so anywhere between 10,000 and 50,000, and that will be credited to you on your June to September activity statements. So for monthly payers, you will get 25% of your stage 1 amount in June, July, August, and September. For quarterly payers, you will get 50% of your March instalment amount on your June and September activity statements.
I think we had that in a bit of our case study if we extended the Mr. and Mrs. Jones example, Steve.
We do. Mr. and Mrs. Jones, and this again is a live example. As you recall, they pay themselves $1,500 per month each. Now, we're not addressing Jobkeeper here, we're just addressing their scenario as it currently stands, or currently stood. Because they're earning only $1,500, there was actually no PAYG withheld from their salary and deducted to pay to them.
Yeah, they were less than the threshold.
They were less than the threshold, so they didn't have to pay anything to the ATO on their BASs for their wages, and that had been the arrangement for several years.
Yeah, so we had one of the questions earlier, which I haven't got to yet, which said, well, can I still get a refund even if I haven't paid pay-as-you-go? So this will answer that question for that.
Providing they're an employer that was declaring wages. Okay, so Mr. and Mrs. Jones are proactively managing their BAS report, and on lodgement of their March BAS, they disclose their normal wages. Ignoring Jobkeeper, they would show gross wages of $3,000, being 2 lots of $1,500, and no PAYG withheld. Under their scenario, they will obtain a $10,000 credit on their BAS. Now, I haven't mentioned it before, but this part of the incentive program by the ATO is tax-free. So you don't get paid $10,000 and then have to declare it and pay a third of it back in tax. It's a totally tax-free payment. They receive that $10,000 on their March BAS, and then on their June and September BASs, they will receive an additional $5,000 credit, being 50% of the stage 1 credit, which is the amount that was shown in their case on their March BAS. That credit's offset by any other liability owing to the ATO or on the BAS, such as GST. If their net result is a credit balance, the ATO will issue a refund for that net balance, and the legislation requires it to be paid in 14 days.
Yeah, so just to reiterate, if they didn't know that much money to the ATO for pay-as-you-go or whatever the case was, they would get that cash back.
And they should get it in 14 days.
Yeah, and there's the opportunity, I believe, where you can actually accelerate your registration or change your registration from quarterly to monthly if you're so inclined. We're not encouraging that at present.
We're not encouraging that, and I've got to admit I haven't done too much digging into that field, but yes.
No, there's the opportunity to. More in the detail later when we actually get to see the legislation, which is awesome. So, okay, so now if we continue with the results, Sue, so where did we finish up with that?
Okay, this set of numbers here is Mr. and Mrs. Jones' actual results based on them obtaining Jobkeeper and the BAS discount. So all the details are the same with as the previous examples. They increased their monthly payment to fortnightly. And as a result, the ATO gives them $1,500 per fortnight per employee for approximately 6 months, or up to 6 months. Now that's approximately $36,000 worth of JobKeeper support. Their BAS discounts that we've talked about, $10,000 on the March BAS, $5,000 on the June BAS, $5,000 on the September BAS, so a total of $20,000. You add that 36,000 JobKeeper and that 20,000 BAS discount, and Mr. and Mrs. Jones are actually receiving support of around about $56,000.
Excellent. So, in Mr. and Mrs. Jones were able to apply for the JobKeeper strategies.
Yep.
Even in some larger businesses that may not have been suffered the 30% downturn, there's still the capability potentially to get at least or potentially another $100,000 cash back to those businesses.
The BAS discount applies providing you are not a super large employer. I haven't gone into the details of the purpose of this discussion.
No, and from the registration forms, we don't have anyone in that space. But it's really critical at this stage to be up to date with your taxation affairs, because all of these stimulus measures are largely dependent upon your tax affairs being up to date. So that your tax returns have been lodged in accordance with, and then they're up to date. That you're undertaking single touch payroll, you're maintaining your BASs, and they're all up to date and being lodged. So it's very important now more than ever that you basically consider your information systems, and particularly your accounting systems in your business. If they're not able to generate this relevant financial information on a timely and relevant and accurate basis fairly quickly, then perhaps it's an appropriate time to consider investing some of the stimulus money that you are or perhaps can come wisely to invest in a great accounting system that's cloud-based, up to date, and will allow you to effectively work with your advisors. Absolutely critical in this March to June period that you're making sure your BAS reporting is accurate and you're not leaving any potential opportunities off the table. So if you want to talk to your accountant, now is exactly the time that you should be looking to do just that. So
absolutely. Can I just quickly interrupt there? I'll just say that with the BAS discount, there are some anti-avoidance provisions. So when you're looking at the question of why don't I just ramp up my salaries and try and get the maximum amount of 50,000 rather than the 20,000 I would be entitled to if I just looked at my history. You need to talk to your advisor. There may be some things that you can do to boost the actual amount you claim, but you have to be very careful.
Yeah, it's dead right. So the tax office are aware of that opportunity. They'll be keeping a tight eye on that. I suppose that investing in a good decision system in your business and good accounting system will bear fruit long after this crisis is over and done with. So better decisions will mean absolutely a better business. And this crisis will end. We will get through this. So that from a positive note, that's a good opportunity to take the next action step. And again, it's one of those ones I would suggest that if it isn't on your list to evaluate, probably could be. So Steve, we talked about instant asset write-offs in our summary earlier. And we've been talking to clients who are considering investments with their plant machinery at the moment. Why don't you give us an update of what the government's proposed in this space?
Okay, instant asset write-offs are basically a situation where you can get a tax deduction. I emphasise deduction as opposed to a refund of the amount of the cost of assets acquired up to a cost at the moment of $150,000. That's an increase from 30 and is only applicable to the 30th of June 2020. Now, this applies to any businesses with an aggregated annual turnover of less than 500 million. Again, that was previously 50 million. It's a simple case, this one, of how do you access it. You need to have new or second-hand plant equipment costing less than $150,000. And this is on essentially a per item basis. So if you had 3 trucks that were 120,000 each, you could claim the full 360. But this stuff needs to be purchased and installed ready for use by the 30th of June. Now there's one little glitch here that you need to be aware of, and that's cars. ATO has always taken the view that if you spend more than $57,581, don't ask me where that came from, on a car, you've acquired a luxury vehicle. So even with the immediate write-offs that are available and the 150 that has been announced, you are limited to that 57,000. An interesting thing in terms of this instant asset write-off is that the $30,000 threshold and the $150,000 threshold is not a permanent right into the legislation. The legislation actually says you can claim an instant asset write-off for assets acquired up to a cost of $1,000. Normally what happens in the federal budget, which comes out in May, they extend the higher figure, which is what was currently 30 up until the announcement 3 weeks ago, for another 12 months. What we have is a situation where the extension only runs to the 30th of June, and the federal budget is now not happening until October, so you could potentially find that your instant asset write-off on the 29th of June is $150,000, but on the 1st of July, if you've got an invoice that's dated the 1st of July, you will only be able to claim assets up to $1,000.
Yeah, I think it's probably pertinent to note too that this was another one of the first initiatives that the government did announce.
Yes.
So at that stage, we were still talking about avoiding potentially a recession. That was one of the earlier measures, and the main purpose of this was to try and drive purchases into the June quarter. However, it's pretty clear that we will not avoid the recession, so perhaps it may well be that they'll look to extend this, but we can't. But yeah, Steve's point's absolutely valid at the way it currently stands.
At the moment, everybody can understand all this stuff has been written on the fly to try and stimulate the economy. Those sort of things, that's just one of the little things that's fallen through the cracks at the moment. It's a glitch. I can't tell you that they're going to fix it, but there's a good chance they will.
Yeah, great. And it just as an aside, I've got several open questions at the moment that are targeting specific detail questions about their own individual circumstances. Just to remind people at the moment, more than happy to deal with those constructively when we get the opportunity to meet one-on-one and discuss your own personal circumstances. But we're dealing with, in large cases at present, with information that's by pronouncement. We haven't had the opportunity to even review the legislation as yet, and that's only just
well,
assisted
at
Parliament.
the moment, as it stands, the legislation at the time we're doing this seminar, and I'm just making this comment for people who watch it after the event, it has passed the House of Reps, but it hasn't passed the Senate as yet. And the Senate is going into tonight
to do just that. So there's some instant asset write-offs. Steve, we've got some further extensions perhaps into the new year.
Okay, this is for those assets that cost more than $150,000. If it's less than $150,000, you get the instant asset write-off. So there will be circumstances where a business is acquiring a major piece of plant equipment, a truck, a major piece of machinery, especially in a retooling scenario where a business manufacturer is trying to adapt to the production requirements and the new production line. So up until the 20th of June, this applies to assets costing over more than $150,000 and presumably based on the way it's standing from 1st of July to 30th of June 2021 costing more than $1,000. What you get is 50% write-off at the time that you acquire the asset, with normal depreciation rules applying the balance of the
so it's an extra 50%.
It's an extra 50%, where depreciation was normally, say, 10% on an asset per annum, and it was, say, a $200,000 asset, the deduction would be $20,000 a year. What the 50% write-off will do is enable the purchaser to claim $100,000 of that $200,000 straight up. Now, this is slightly different to the instant asset write-off in the sense that instant asset write-off applies to new and second-hand equipment. This one only applies to new equipment. So be aware of that one.
Yeah, so only new stuff.
Yes.
Yeah. I suppose at present we've been working with certain clients who have been forced to close, and perhaps they own their premises, such as hotels. They've been using the downtime to actually properly improve their premises and get themselves well positioned for when the crisis is over and done with, and using some of these concessions that are available to help mitigate some of the tax liabilities that would otherwise be accruing. So again, I would recommend that if you have capital requirements, or you were thinking about perhaps the need to change some things or improve some things in your business, now's a great time to have a chat with us and just see whether that's beneficial to do that pre-30 June or after. So, Steve, one of the key issues that's been flagged in various sectors is fee waivers, and different rules for different states, but in different local areas. So, what can you give us? Where do things stand at the moment?
Where do things stand? It's a really hard one to answer in broad terms. The simple answer is wherever you've got costs, banks, insurances, state and local taxes, you need to be talking to those organisations. Now, some of them will have already announced that they will be issuing fee deferrals. I saw in the Financial Review on Saturday that 4 of the major insurers were providing a 6-month business insurance policy extension. State government, you need to talk to them in terms of getting to the Service New South Wales website and look at the things that apply to you. Local governments, every local government has got something on their website. To give you an example, I downloaded the Central Coast Council one, just to give you some idea. If you're not in the Central Coast area, your circumstance may be different, but same but different, I think is the phrase that comes to mind. So I'm just going to read this extract from the Central Coast Council site. In the initial phase, Council will focus on industries that have been impacted by the current lockdown measures by waiving or refunding the following. 1. Footpath dining, food licence and temporary goods stall and premises fees. 2. Fees associated with health and building compliance activities for businesses such as hairdressers, nail shops and tattoo parlours. 3. Lease licences for Council's commercial properties including cinemas, cafes, gyms and restaurants. 4. Temporary event fees and fees associated with the use of parks for events such as weddings, markets and personal training sessions. Probably not relevant anymore, but it's in there. Booking fees for all cancelled events on council properties, community venues, senior centres, youth centres, sporting facilities. Cost to community groups for future advertising, bookings on banners, poles, as events which have been restricted due to social distancing rules. Static and distancing advertising bookings for Central Coast Stadium. Leases, licences for council's community properties including surf clubs, community centres, land leases, recreation centres, art facilities, cottages and residential. And the last one I really quite enjoyed. With restrictions on dining establishments to take away, Council will also take a flexible approach to parking and other infringements to allow patrons to continue to access various local services. Obviously that's Central Coast Council, but it's an example of what's there.
Would have helped me about 2 weeks ago, but that's another story.
The major takedown is talk to the applicable organisation as soon as you can. Sometimes the first thing to do is to look at their website and Google within their website or search within their website COVID-19 response.
Thanks, Steve. Now, there are loan support options and interest rate relief available, and there's been a fair bit of information on the press about this, but not sure that we've had the same degree of detail from the banks. Steve, why don't you give us the current state of play?
Yeah, with the banks, I think the answer is we'll get back to you. They have had that many people applying for these things that there's a queue. I did read that one of the banks has actually implemented an automatic deferral on some of their business loans. I don't know the ins and outs of that. Essentially, the interest rates and loan options that exist have been driven by the fact that the federal government has thrown a whole heap of money to the banks and said, we want you to set up deferral arrangements for business clients impacted by COVID-19. So what's initially in place is up to 6 months deferral on existing loan repayments. Now that can be interest-only loans, principal and interest loans, or well, basically they're the two. It doesn't really make any difference. There is this option of 6 months. The end of that is that may result in a 6-month extension of your loan. Unfortunately, at this stage, if you take this option, the bank is still charging you interest. They're not giving it to you for free, but it will be capitalised into the loan. The second one that has happened is that the government has done a deal with the banks to provide up to $250,000 unsecured for business purposes when you've been impacted by COVID-19, with a 6 months deferral in terms of the initial repayment. So 250 up front, wait 6 months before you start repayment. And this one is only a relatively short term, it's a 3-year term, but to get around the bank's reluctance of issuing unsecured loans, the federal government is offering a 50% guarantee on those things.
Yeah, so the key advice at the moment would be for our clients is to have a chat to their bank, make sure the bank's on notice that perhaps if there's any cash flow issues that we need to be seeking the bank's support, and the banks are willing and have been positive in certain circumstances for clients who've already achieved some relief. So time to look at your cash flow budget if you haven't had the opportunity to, or if you have concerns about how to best hold things together at this time. So we also had some announcements on Friday from the New South Wales Treasurer, which optioned, or perhaps put an option on the table, of a $10,000 grant available for small businesses, which again we might have a lot of detail on, Steve, but why don't you tell the audience exactly what we did have?
Okay, the grant is up to $10,000 and it can be used to fund unavoidable business costs such as utilities, overheads, legal costs and financial advice. Now that is a fairly helpful thing under the current circumstances.
Yeah, so the government's, New South Wales government's trying to facilitate basically small business having good quality advice at this time when they need it, and they're trying to make that easier for those people to pay for that advice. So it's welcome for us, and it also allows potentially the opportunity for people to tap into some support which otherwise they might not be able to in this current environment. So
the definition of what a small business is there is up on the screen in terms of who for. You've got to have between 1 and 19 staff, and your turnover has got to be more than $75,000. You've also got to be highly impacted by essentially the COVID-19 situation.
And I don't think they've given us a strict definition about what highly impacted means yet.
No, not that I'm aware of.
No, but you'd have to think, given what's been there, that they'd be using the same 30% benchmark as what other businesses have been.
Yeah, although this is a state government thing, or rather the federal government, the 30% benchmark that has been announced is in relation to the federal government.
Gotcha.
Applications, sorry, before we get onto this one though, the applications are through the Service New South Wales website and they're not yet up. The application form should be on the website by the 17th of April. What that's going to consist of, I can't tell you, but I do know that they are going to require that you provide, and again, no definition, but you provide appropriate documentation on application.
Which again means that you need to have your financial records up to date, because there will be no doubt a financial element to that disclosure. Great. Well, Steve has been an absolute support bastion for all of our team in here at AdviceCo in getting on top of basically all of these changes, all of these announcements, and allowing us to communicate effectively and quickly with our clients. And so I'd like to thank him again. And it's been a challenge for Steve, I know well and truly. And effectively, at least in the next week, we will have some legislation that you can have a good opportunity to wade through. Spoken like a true accountant. So in the interim, what we have been doing is we've developed a stimulus strategy roadmap for our clients. And these are if you like, are the 10 key strategies that we're reviewing with each and every one of our clients. Not everyone needs every one of the 10 strategies. However, this is where we're focusing in our time. So we've been proactively going through, making sure that the clients have had advice, that they're considering their HR issues, and dealing with each one of these key issues which relate to the stimulus measures that we've talked about. So the stimulus measures all fit within various components of these strategies, but it's important that you take the opportunity to look at your own business at this time and see how potentially it can be improved or helped by good quality advice and availing yourself of the opportunities that are there. So following on from that, having attended tonight and basically taking the time and investing the time in your business, you have the opportunity to take the next step, and that is perhaps to basically see how these own individual circumstances can be applied, or these strategies can be applied to your own circumstances. So we can move from what we've been talking about, more general advice, and be more targeted or specific to your particular business. So for those that we aren't already working with constructively, you'll have the opportunity to sit with one-on-one virtually with one of our key advisors to revisit those 10 key strategies and just see whether there's opportunities for you to benefit from us. So I encourage you very much to take that opportunity because you've invested time and energy tonight, and I guarantee that you will get value from the discussion that you have. So following on from tonight's presentation, you will receive a feedback form. We absolutely have, as I said earlier in the presentation, we've been providing seminars and information updates to our clients and the broader business community on the coast here for well over 10 years. We live or die by this feedback. So we improve our services and we target what we need to change and do things differently to add more value to clients by that feedback. So if you spend the time to provide that to us, we much appreciate it. A specific section of that feedback form will do with what is the appropriate time for you to sit down, what day works for you to sit down and have a chat with our key advisors. So this is your opportunity to be better off, and we really do encourage you to take that step. The link is on the website, and as soon as you provide the feedback forms, you will have the opportunity to download a copy of this presentation, as well as some of the supporting materials. So for those who, I thank you for your attendance tonight, but there may be other businesses perhaps who weren't able to attend tonight, friends and colleagues that you have who you think would benefit from this session. We are running another session, same time, same back channel next week, effectively, which will have the lion's share of the information we've already covered, plus updates to what we've received in the interim. So I encourage you and we welcome you to distribute this to business colleagues or other people you think you would benefit from sitting down and listening to this presentation. So we encourage you to distribute that and help others. It wouldn't be an accountant's presentation without dealing with a disclaimer. It's an accountant's joke. Effectively, the concepts we've talked about tonight are very fluid, but more importantly, they're general in nature at the moment. You do have the opportunity for us to give you specific personal advice for your own circumstances, as I've already alluded to. So I do encourage you to take that step. But once again, I do appreciate your attendance tonight. We appreciate the wider community, businesses out there that are doing their level best to survive what is an absolute unprecedented circumstance that we all currently face. Businesses are the lifeblood, particularly small businesses, are the lifeblood of the community. So we thank you for what you've been doing, and I thank you for your participation. Again, we're close to time. We actually run over slightly, but the people who have submitted questions, I apologise for not being able to get to those tonight, but we will be able to give you an opportunity to resolve any of those issues when we do catch up. So on behalf of the Advice Co team and Sarah, who's you haven't seen Sarah, she's in the corner over there making sure the IT all works. So we thank you. Thank Steve again. So please be safe. Do the best you can.